You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Servati.
Hello, everyone, and welcome to yet another exciting, stable episode of the Big Cast. My name's John Best. I'm the CEO of Best Innovation Group. And with me is the man, the legend, Glen Servati, who is the CEO of U.S. Cannabis Stablecoin. And he's here to talk about his cannabis coin, which actually there probably is a cannabis coin, isn't there,
I'm
Glenn?
sure there
There's
is.
got to be a cannabis coin. No, today's going to be all about Open USD and open standards and payments, and things are just getting crazy.
I was going to
all of
say,
a
I think
sudden.
you're over-promising by saying a stable edition, because this could go in a lot of different directions.
Yeah, well, it's about the instability of the stable coin network,
There we
if you
go.
will.
I like it.
Unstable stable coins. There's your podcast name, or unstable stable coins. So, but yeah, let's talk about it. So there's an article that just came out, and there's been a whole bunch of announcements. Want to catch me up?
Well, I'll boil it down to what I see is I don't even know what to call them. Consortium? I'm not sure exactly how it's
Banks, card networks, fintechs,
but
companies. It's
but
all kinds of them.
what
140
is
businesses.
open standard, I guess, is my question. It's a organization, it's a consortium, it's a group that people are welcome to join, and they are going to launch their own stablecoin called Open USD. They've got 140 organizations that have agreed to join. The ones that kind of are relevant, I think, to us: big banks, US Bank, BNY Mellon, BBVA. You got Visa, MasterCard, Amex throwing in, Coinbase and Ripple. From the processor side, you got Fiserv and Jack Henry on the list. Lots of key players. And the idea is, I thought it was interesting that they laid it out as they're trying to address three key principles. One, it's expensive to mint and redeem stablecoins, especially at scale. So they're saying there's going to be no cost and no artificial volume limits to actually hold people back. They're going to be sharing the reserves that are earned on the, they're going to share the earnings on the reserves evenly across the participants. I'm not sure what evenly means. I mean, by pro rata or whatever, minus a management fee. Again, I'm not clear what the management fee may look like. And then the key, again, being collaboratively run in the collective interest. The idea being that we need scale and continuity and clarity and having everybody pulling together in the same direction. All great, I think, motherhood and apple pie principles, a lot tougher to make happen, especially when you have diverging interests of these people. But a really interesting and kind of decent sized shot across the bow to actually try to make some of this stuff happen. Would you agree?
Yeah, I see kind of another angle.
Okay.
The angle is interesting because history repeats itself. We're doomed to repeat it, right? And here's what I think. My take is this: this is a coordinated move by the fintech infrastructures and the finance, the FIs, to create a shared stablecoin rail before Circle or Tether or PayPal or any of these other big players becomes too dominant.
Yeah,
And
that's
so,
fair.
because a stablecoin's a stablecoin, but there is a little bit of, there is a little bit of, it's pegged to $1, but truly it's like it's that plus the gas it takes to move it around, right? In terms of which network it's on. So, and the other reason that I think that's the case is because the thing that they really hung their hat on in this whole article and kind of what they've said is that they're going to use so Bridge, which was bought by Stripe, had gotten conditional OCC approval through a bank for a bank charter. So you need a bank to pull this off. You got to be a bank. So apparently Bridge is going to become a bank, and Stripe owns Bridge. So Bridge becomes the clearinghouse for whatever this big network is. That's what I read into it.
Yeah, I mean, and to me, it's just a matter of who, the fight, as you say, whether it's Circle, Tether, whatever, it's the battle to control the infrastructure. And again, that's the world repeating itself when we look at the card networks and the network and everything else.
So I was looking, and I pulled them all down. There are so many coins. There's USDC, which is Circle. There's USDT, which is Tether. There's PYUSD, which is PayPal. There's RLUSD, which is Ripple. There's USDG, which is a Paxos piece. And now there's Open USD. And don't forget USDE, USDS, and FRX USD, which are all DeFi natives that are built on top of things like the Poly market, where they're doing the predictive stuff. So what's happening is, I think, is that everybody realizes that there's going to be a liquidity war. And that liquidity war is going to be about whoever collects the most of these or can route the most of these. And it reminds me of, the old days when you would go to the gas station and you think, okay, what I remember clearly is mobile. They used to have that Pegasus thing, and they also had one of the very first RFID payment. Remember, you get the little wand that you put on your keychain and it would light up the Pegasus. And, but if you wanted to use your card rather than use that, you had to look. The machine had a big giant list of what we used to call bugs.
Yep. Whether
the little
gas
pictures
station or a debit card. Yeah, it makes sure you had one that worked there.
Yeah, and then you'd have to look on the back of your card. And the worst part is some of them would be little derivatives of each other, so it would look awful close. It's almost like the whole, choose all the pictures with a bicycle in it is what it felt like back then. Except for, right or wrong just meant that really I stopped doing it. I would just put the card in and try it. If it
exactly. Why bother? You're going to get a yes, no that way.
But then that started changing things too, because then we introduced signature, which then could route it in a different direction and cost more or less. So we've created all this complexity. So that's the first one, is the liquidity war. I think the next war is going to be, who do we trust from a regulatory standpoint, right? Is it Circle? Is it Open USD? It would seem Open USD with all the, I think they've made a strong case for being sort of a wallet of wallets of stable coins, if you will.
Now let's hold on. Let me be careful on that one. They've made a strong case, but they haven't actually put anything in market.
You're right.
I saw one comment on social media saying, "Didn't we learn anything from Libra?" Which, again, I don't think that's a terribly fair comparison. But at one point it was, we got Facebook getting into the crypto war, so I guess they've got the critical mass, it'll be over. Well, that never got off the ground either, in part because they had all these disparate participants who couldn't get their act together. Then the government got involved, and et cetera. But anyway, I digress.
Well, and by the way, that leads perfectly into the next war, which is the distribution war, right? Between the PayPals, the Stripes, the Visas, MasterCard, Coinbase, banks, merchants, fintechs, you name it, right? Everybody wants to use their, stablecoin platform, right? Which leads us to this sort of economic war of, what does a single issuer reserve yield versus, the shared network economics, right? So if you're going to have enough reserve on hand to deal with all the other players and bridge, which is what bridge wants to do, what does that look like versus like this sort of being decentralized across all these other players, where the money is spread out as opposed to being sort of in one reserve as a backing piece. It's kind of the Fort Knox principle, if you will.
Yeah, and the basic scale principle. You made the one comment, which one are we going to trust? The best quote that I saw in the release from Open Standard was from Visa's chief strategy officer, and he said, "Scale only comes with trust." And when you put all these different organizations presumably, if they get out of the gate and they continue to put their money where their mouth is and use it and promote it, that's a pretty heavy amount of trust if you trust the organizations that are behind it. And most of those organizations have a fair bit of trust. The other thing that I'm seeing, and I've heard this from a couple of different folks in my circle, no pun intended, Jim Perry, who I think we talked about before, you may know, he tends to do a lot of analysis in the community bank space, but I think it applies to credit unions as well, is he basically posted the release and said, here's more examples that the big boys are putting the infrastructure together, and community banks, and I'd say credit unions fall in the same category, you're not at the party. And they, the open standards people would say, it's not that you're not invited, you're welcome, come on in. Now, the question is how much, of a voice you're going to have at that table. The other person I heard was, how is this any different than, early warning systems or RTP or somebody like that, where, yes, in theory it's open, but it's really controlled by the big boys. So
let me ask you this question.
Yeah.
Okay, you and me doing USDC and that sort of thing is one thing. Like, okay, maybe on a good day, Glen's got a couple $1,000 out there that he's moving around somehow with
Right.
USDC or whatever. But the bigger organizations, your international payment schemes, we're talking $50 million of a stable coin, and they want to cash that out. Are you going to be able to do that through Circle or Tether? And especially when they were maybe gathered from other environments and all that transfer, that's where things get interesting. Is do you buy, if you have $50 million worth of a stable coin, what does that look like, and how do you turn that into liquidity when you need it? And who's going to do that? It's like if you show up at the bank with a $50 million check, you should probably call ahead and make sure they got $50 million, right?
I agree with you, but I think it's a matter of scale. And and again, you can add a couple more zeros if you want, but could USDC do it? Yeah, probably. If not much differently than other folks, but and you and I were talking about this before as well. Again, the credit union world. Where are we going to cast our chips? And I continue to wonder, even if the entire credit union community got together behind one stablecoin solution, would that be sufficient from a scale standpoint? I'm pretty darn sure that it is not sufficient in scale if we splinter and try to do four or five different, platforms and 4 or 5 different initiatives. Now, maybe that'll all shake out quickly enough, but I'm a little bit concerned about fragmenting whatever influence we do have.
So get this, and this is just one. I'm looking at another one here. I want to pull it up,
I can see you
yeah,
typing away. I figured
want
you
you
had
to,
something good here.
yeah, I want you to take a guess. How much money per month do you think just Tether uh, moved, in 2025?
Per month.
Mm-hmm.
And Tether is the biggest. I mean, despite the fact that we talk more about Circle here, Tether is about a 2-to-1 ratio. They've got, I think, 2/3 over 2/3, 1/3 there, and then everybody else, at least until recently, was rounding error. And if you can't tell, I'm delaying because I don't have a good answer. And I don't want to sound like an idiot. Per month, let me say 45 billion.
703 billion per month,
I thought I was afraid of going too high.
peaking
So
in June of 2025 to $1 trillion.
they hit $1 trillion in a month. $1 trillion in a month. Wow.
So, that's going to be hard to dislodge. I mean, clearly, and they've had their problems. Tether, went through their regulatory stuff.
Well, and they still are. I mean, they are not Genius Act compliant. They're not going to be part of the Genius Act.
So yeah, I thought that was pretty interesting. The numbers there. So, but yeah, I think in 2025, Chainalysis reported that for 2025, all USDC traffic, $28 trillion.
I got to go back and see what the overall churn in the U.S. payment system would be. And obviously, this is a broader population too, because a lot of this is offshore.
And this year, we're already on track to double that.
Wow.
To go to 47 trillion ish, not quite doubling, but close.
I'm just going back the brand new Federal Reserve payment study, non-cash payments in the U.S., which I don't believe captures any crypto like this right now, is showing at 140 trillion. So we're catching up.
So the interesting thing is, knowing what we know and who we are, right? We're in the midst of all these payments with all these credit unions. Do you know of any credit union that's got some stable coin they're shipping around to other credit unions right now, moving things around that way, and their Alco or their treasury?
I bet if we said no, we'd get a call from a couple folks, but I would say nothing on more than a little science project.
Right, but I'd love to. And by the way, if you're out there and you're doing this, we'd love to hear from you.
What was it? St. Cloud? I got a feeling we might get a call from up in northern Minnesota.
Yeah. Oh, for sure. I think he would definitely be on board with that. So, but my question is, to your point is, so where is all this traffic coming from? Who is doing it? Because that's some massive numbers, and it can't just all be, people buying Polymarket prediction accounts at $500 or whatever. It's got to be I think there has to be some big players in there, some big
It would be
corporations.
very, I don't know if there's a way to get at that. I mean, that'd be a good question. What percentage of it is, this is not a good phrase, legitimate commercial traffic as compared to swapping in and out of different crypto, poly market trades, things like that? Because I don't think all of that is being captured in the Fed numbers either, in terms of, swaps between financial institutions and things like that. It's a little bit more, from a commercial standpoint. So it's a little bit of what it is you're trying to measure and looking to satisfy from a use case standpoint too.
Yeah, exactly. But there's also merchant side of this as well that's starting to pop
And there
up.
are plenty of merchants involved in the open standard announcement.
Right. And there was a ton of them in there because they all know. And so what is that a threat to?
Interchange.
It always comes back to interchange. We should call Illinois and let them know before they get too far down the road of trying to make it so that like a sweater has different interchange than say a shirt or something
I like
that.
that. Sweaters versus jogging tops. We can have a different. No, do you see they're going after buy now, pay later now too?
Yeah, I did.
I actually kind of agree with them on that one, but that's neither here nor there.
So centralized exchanges are some of the biggest numbers. So a lot of this movement we're seeing is stuff that's going between, say, Coinbase and Kraken and Binance and those kinds of guys. Which, by the way, I got my whole. I want to say I think it's Binance or Bittrex. I want to say it's Binance. Like I got a whole victim thing from that. Like I'm on the list of the court case. And, they haven't apprehended the two guys, but I was able to look into it because of the access they gave me and pull down like all of the course filings about these two guys that ran that.
So they reached out to you and said, "Hey, you're implicated here."
Oh yeah, because I mean, I had accounts at all of them. We both
by
did. Well, I
definition.
did. I had tons of them. So I've got a lot of information. I thought we might do a fun episode to like just tell that story because I thought it was very interesting. But yeah, I think that's who's using it. It was very interesting to me. There's a lot of fintechs that are using it now. We're starting to see MasterCard and Visa really play heavily in there for their own.
We're talking what 2025 numbers?
Yeah, 2025 to early 2026, or so far in 2026. But B2B dominates the stablecoins.
Yeah, absolutely.
And that's where the big numbers come because there's huge chunks that are getting moved around. And that's, but then think about how the liquidity's got to flow through the bridge, right? Like, okay, if I send $50 million of, from one stablecoin to another to get it over to wherever its endpoint is, the other side has to suddenly have $50 million to back it, And so it doesn't just get divested from the other group. It's just wild how it all plays out.
Yeah, and again, it's a different use case because again, it's mostly retail payments we're talking about in the Federal Reserve study. So it doesn't even incorporate the kind of things we're talking about here. That despite that, the fact that typically you make more money on small transactions because the rate goes down on the big ones. There's an awful lot of attention being paid by the big banks to those big dollar transactions too.
What's large and growing is remittances. Interesting.
Oh yeah.
And that's a very interesting one because I was thinking about indirect lending payments. I've been doing some research on why an indirect member doesn't, further engage with the credit union. And what I think I've come to the conclusion of is because of the way we handle the payment process, which basically just makes us a coupon book in someone's hand. And when they get to engage with the digital infrastructure, so say they don't get the coupon book or they miss it, we have a very high rate of converting the members who go into home banking to try to do it. So could stablecoin be a way of doing that sort of remittance to create value and build some sort of portal that they could come into that would give them more value and encourage them via the process to open accounts, or to further open accounts or further engage credit union services.
That's interesting. So that's going in a different direction. So it sounds like you think you may have cracked the code to some extent on that long-standing issue of, it's great to have indirect members and get a few loans, but you want to like somehow solidify and extend that relationship. And you think you might have found
I would say, here's what I would say. I would say indirect lending, onboarding and engagements a little like alchemy. I'm pretty sure I can turn lead into gold, but there are a lot of folks really believe that, and there were a lot of a lot of science that was useful that came out of it, but by and large, we never did finally figure out how to, live forever or turn lead into gold. So
I like that. That's a good analogy.
I think it's an alchemy in a way that I don't know for sure, but I tried to really go at it from a whole different perspective. And I think that could be a whole episode in itself, but I think stablecoins might play a role there too. So I do think there's use cases, and I think that it's important to understand what's happening in this space. The credit union just sent out another RFI, which, they followed up on the previous one. And there's just a lot of interest in the credit union space in starting their own, but this should have nothing else show you. Yeah, this should have nothing else show you that that's not a good idea.
And that's my point. I'm not even sure it makes sense when you cluster together credit unions, unless you cluster together pretty much all of them. And even then, I'm not sure.
Well, and these numbers, they bear that out from what we're seeing. The other thing I think is interesting is the DeFi financial activity, and that's another deep dive we need to take, right? And that's being used for these sort of alternate banking financial tools like lending. So, for example, you want to make a loan, but you don't want to divest your crypto holdings. So you use that as the security of the loan, and then they make the loan for you, and they hang on to that with some sort of algorithm that says, hey, if the value drops between 2 and 8% or whatever, then they have to top it up or do something to keep the security in place. But that used to be a very big edge case, and it's no longer. It looks like it's really growing based on what I'm seeing. So
I don't remember seeing any credit unions on the list of participants in Open Standard. The closest thing I can think of is if we think of Fiserv or Jack Henry potentially as kind of our proxies at the table. The only place I can really see any clear, comparison.
I would say, it's not bad proxies to have. Both of those guys, as much as I like to beat up Fiserv, they always remember the credit union industry when they do work. So, and Jack Henry for sure does that. But you're right. There are no credit unions, not one listed. But you have things like Westpac, which is out of Australia, a lot of Australian banks, Bancor, BNY, and then you do have Jack Henry, Fiserv, Virtuity, which is a big payment infrastructure. And
as
SoFi,
you said before, ton of fintechs.
Yep, and SoFi, which is interesting.
And again, it'll be interesting, as we said, and this was true again of Libra, although I'm not, drawing too strong a parallel between the two. It's easy to put your name on a press release, and when you really get down to really doing stuff with it, is they say they're going to be live with something by the end of the year, which sounds pretty darn aggressive to me.
The one that's interesting to me is Shopify.
I did not notice them on there. I can understand from a merchant kind of standpoint.
Yeah,
basically become the proxy for like every mini merchant.
Yeah, well, if you think of like Etsy as a peer, it does make sense. But again, interchange and cards and insurance and all the things that go with it, right? But if you go down to what I liken it to, Glenn, you go down to the farmer's market and somebody's got a booth and they're selling something that's not quite food, maybe a product of some sort, a lotion or whatever, and you pay them in cash and you leave, right? You don't expect the full trappings of the U.S. retail system and to protect you. You're not going to show back up. I mean, you could come back the next week if they're there and try to return something, and if they're a good business, they will. But you don't really have that contract with them that you have with, say, a TJ Maxx or a bricks and mortar retail store. Would you agree?
For the most part, yeah. I'm not sure where you're going with this, though, because do you think people are prepared or aware that they could be, giving up those protections in the process?
I think that they will become aware when I think things like Shopify and Etsy are basically the digital versions of those pop-up shops in the mall and, at farmers' places and those types of retail products. And that stablecoin will be the digital version of cash for that.
But it'll be interesting because right now, I believe that the typical person does think, and that's kind of how, PayPal wound up getting ingrained within eBay, is it did create some equivalent of that type of protection that was being, the Shopify name. If one of their vendors gets enough complaints, they're probably going to take them off the platform.
The thing that's interesting, that's different, is with stablecoin, there's an identity piece in there. Like if I go to the mall or if I go to the farmer's market and I buy the guy's widget, there are people like selling socks, that must have fallen off the back of a truck or whatever. There's no.
Sounds like you go to flea markets more than farmers markets, but
I don't know. But
that's neither here nor there.
I've seen them in Colorado, but But bottom line is that when you go to buy something from them, unless you use your card and they break out Stripe or something on their local phone, if you have cash, you don't have to give them any information about yourself.
True.
Whereas it's going to be interesting to see how the next level down, the MetaMask, the Coinbase wallet base, and all of these other wallets out there, what does that look like from a compliance standpoint, and what does that look like from a privacy standpoint? So,
and to me, in my mind, I think what you touched on too is, and what does it look like from a user experience standpoint? Because if it isn't as seamless and where you're not even thinking about what it is you're using to pay, I think that's going to be a pretty significant hurdle to overcome.
You could create a wallet without, no one knows who the wallet owns to, but again, if there's enough correlatable activity on the chain, you can figure out who they are.
Yeah, and again, how much? How have you just kind of limited your addressable market by saying you can create a wallet? At this stage of the game, that's still a bridge too far for, I'd say, a good majority of the population.
Right, but yet Coinbase will do it for you.
Right, and that's the thing. It has to become something that you don't even have to think about.
Yeah. So, how much of the Coinbase or how much of the stablecoin? 28 trillion from 2025 do you think was criminal in nature?
I'm not nearly as cynical about that as most people. I think it's more than the traditional payment rails, but I don't think by a significant margin. I'd probably put it in the low single digits, maybe 10, 12%.
0.5. Your instinct was right. It's very low.
I'm not going to take credit for my instinct being low. That's lower than I thought. It's still higher than the traditional system, but I thought it would have been a bit higher than that. One more thing I want to mention, because when you mentioned interchange too, there's going to be a blog out, and we'll post a link to it on the show notes too, but the Federal Reserve at long last has put out its payment study on 2024 data, which is, in my mind, by far the most authoritative readout of the U.S. market. One of the most amazing things to me in it is credit cards are picking up steam again. I think to some extent there might have been a blip when we looked the last time they did the measurement. They do it every 3 years, 2021. Do you remember we were coming out of COVID? There was that talk about revenge spending and things like that. But what else was going on then, if you think about it? People had larger savings or checking and savings accounts because of all the stimulus money. Debit cards were being used more heavily, and credit cards kind of stepped back a bit. Well, fast forward 3 years, and the rate of increase of debit card payments is double the rate of increase in debit card payments. So suddenly, credit cards taking up a bigger chunk of the overall pie, which gives the merchants that much more reason to figure out how to limit interchange.
Well, exactly. And what's interesting, I think, long term about that is, back to my crime angle, is if I'm trying to today, if I get a bunch of money from a bunch of accounts, my goal is to ACH it to some mule account that I have at Bank of America or some giant organization where there's a sea of accounts where no one will notice me sending in my unsuspecting mule to go get the money out of their account and give me 8,000 of it and keep 2,000 for themselves or whatever the trick is. But guess who doesn't need to do that? Stablecoins, right? So that's a better way to go if you're trying to sort of convert your criminal activity into actual money. So what you do is, if we start adding stablecoin volume, you go in, you buy a bunch of stablecoins using the members' money, and then you just transfer it to yourself. And once that happens, it's gone. Bye-bye. Way worse than if it was sent via ACH. You have a little bit of a chance to claw that back, but you got zero chance of getting it back from the stablecoin address.
Which is where you get right back to the KYC, KYB, KYA. How many different letters can we get there too? But how that's going to be applied to the stablecoin world, and you're getting pushback on that already. But if you don't, you got a big problem.
But then it gets to the international market, right?
Mm-hmm.
You can't ACH to international. That doesn't exist. You got to go through SWIFT or something like that. That's all local. And we have rules around that. Where it gets dicey is that stablecoin is just so, open and international. So who cares? Send it over to whatever country you're from.
Does that mean we have to have cross-border coordination and cooperation? Oh boy.
Yeah, and we all know how well that's going to be. And that's where the fight will be. That's where I think the fight will be. It'll be in those edges. It'll be in the merchants, the wallets, the mules, the offshore exchanges. All the weak compliance partners are all going to get surfaced,
Makes sense.
Well, Glenn, I've enjoyed talking to you about stable coins. And as always, your take is, I think, dead on. I'm glad you're keeping an eye on this. I actually had to catch up to you this time. Usually I'm watching these things. So thank you for
it's funny
sharing
that. The typical kind of contrarian in me, the first stuff I read is, wow, game over. Look what Open Standard just did. And I was kind of happy I wasn't totally out in an island going, guys, this is a press release at this point, and there's a whole lot more to come on this. And I do think it's a significant step, but I'm not declaring game over by any stretch of the imagination.
Well, I think if I'm a CEO, like you said, I got to look at this as a payment rail and not a crypto. We got to get that through our head first and foremost.
Great point.
I think we need to think about what's going to happen with reserve management. What does it look like for all of the various things? What are our vendors going to do? What's the play? And then start educating people internally, because I think it's just a matter of time before, and we probably already have these. Probably already got people calling and asking and saying, "Hey, I want to do this." The people who really want to do it, AI will just walk them through going to Coinbase. And that's another reason why I think the debits and the credits are hitting so hard, is people are using those in those exchanges. You've seen Coinbase come out with their credit card. I actually got one. It was very interesting how it works. I've been getting actually really good returns on like the crypto returns from them. But the thing is, I can also use it to buy as much crypto as I want, which is kind of a little like the casino giving me a card. So yeah, it's interesting. The world's it's an interesting turn, and I think part of the challenge of the deployment of this is that there's not ambiguity. It's very easy to go. It's actually really well documented, but it appears that the concept is just complex enough that it's creating confusion, I think.
Great. I mean, you can't even get the insiders to really fully agree on what it looks like. And for some cases, that's because people have vested interest and they're just trying to put their position forward. But yeah, I mean, we're still in I hate to how many times and how long can we keep saying it? We're still in the early stages.
But here's the thing. These days, thanks to AI, stages don't last long.
Well, and not only that, all it takes is one quick inversion of some big new breakthrough. And it's like, oh, why did nobody think of that before? Gee, remember the day when we still were claiming that we were dealing with all the different bugs, like all the different stable coins out there, and you had to figure out which one was which? We're one step away from that potentially changing overnight.
Well, and stable coins would make it easy to build a new business model for someone like for instance, an Anthropic or a ChatGPT or OpenAI, where you said, hey, our model is going to be not that we bill you every month, but that you keep this stable coin thing topped off, and we'll deduct as you go along for your usage. And that will, since they can't make anything off of it, but it certainly changes their cash flow. And that's very interesting. It's the difference of, it inverts the cash flow problem. I'm collecting payment, or I already have payment that I for sure can collect, and there is no concern for expired cards, or long before you get there what's in there and who's going to be able to get through or not. So I think
that's a really interesting point, that it could, the holy grail of just pure transparency and insight into the inflows and outflows
Yeah.
have happened and are likely to happen in the very near future.
Right. And it just makes perfect sense. And they've been doing this model's always been there. You got the Sears card, which became Discover. They've always thought, hey, why don't we start our own thing and get them to pay out of that? But it's never really been applied to these subscription services except for the all you can eat or drink, kind of model, which is usually like an API or something.
Yeah, you just said the thing about the Discover card, and I just suddenly thought, I wonder if that's ever been a Jeopardy question. This card that, this common credit card now was originally associated with which, Main Street retailer. What percentage of people would know that?
But they had the audacity to start their own card.
Yeah.
I mean, back then, that's pretty crazy. But they were the Amazon of, before Amazon was Amazon.
Absolutely. The Wish Book.
So,
the Wish Book.
The Wish Book. I love the Wish Book. I used to, because, and when I grew up in Germany, we, there wasn't a Sears or anything. So if you went out in the economy, you tend to buy clothes that kind of looked German and European, which wasn't what was in on the American base where the kids were at the high school. And so, your only hope was to buy stuff from the PX, which didn't have a ton of stuff, or Sears. And so every year you go through and order from these catalogs, and pretty crazy.
The Wish Book in Germany, that thing's pretty thick. They sent that over. I guess
my grandmother would pop it in a box and send it to us. She kept us afloat while we were over there. She used to send us Saturday morning cartoons that she recorded. My dad would hang on to them, and on Saturday mornings he would get us all up, toss it in the VCR, and we would sit with him and watch whatever grandma recorded from.
So you make it real time. I love it.
Like weeks ago. He wouldn't just like put them. Once we watched one, he would be in the collection. You could watch it again if you wanted, but he had the brand new ones. And then if he was around on Saturday mornings, it'd be chocolate milk. But you get all that stuff from the other side. And you think of like back then in this delivery system and all this digital delivery now, it just changes the culture as fast as it, and culture is payment, right? I mean, at the end of the day, that's what drives the payment process is the necessity of it, the speed of it, and the culture. So
that's the draw. I mean, I'm thinking about the way, again, the way people consume even, television programs now. The idea that a whole season just boom, there it is.
There it is.
14
right.
episodes.
So why wouldn't you do that with your funding, Yeah. Which, they have things like that, like pay the whole year and save $8. Which in some cases I do that because I know I'm going to use it for the whole year and it is worth the savings. But I think that AI in particular, I think this whole normalization process that they've been going through is not going to last long where it's 50 or 20 or 30 because I think that you can't, first of all, for people who are not good users, anyways, this is a whole nother topic.
Yeah.
We'll stop this earlier.
I was going to say, I wish, speaking of the Wish Book, I wish we could kind of go on this forever. And let's definitely do it. We've got a couple different things we could spin off on from what we started discussing today.
Yep. But today's the unstable stable is all done. So where can people...
We'll post a link to this. I think the best way to do it is go straight to the source and the open standard announcement they put out. People can find me. I think you were about to ask that. These days, I just say LinkedIn. That's where everybody seems to be going anyway. 154 Advisors, Glen Servati. Find me out there. And John, you have multiple storefronts out there.
Yeah, you can find me. I would just go to www.big-fintech.com. That's the fastest way to find me. That, or you can just go outside and scream my name. If you say it loud enough and 3 times, I do show up, like Beetlejuice. So, all right. Well, I hope
that may also trigger the town hall if you do that as well. And,
yeah, I think it does. I think people just show up for that. But yeah, I think I'm curious to see how this all plays out, and I'm glad you brought it to our attention. And if you guys have questions or if you're doing stuff with this, we'd love to hear from you. So, reach out. And until next time, Glenn.
Thank you very much for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.